To bring in David Williams. He's an investor. He's a forecaster at Page Trader. And while David's joining us for a look at a few, he's got his eye on also. David, I was just talking Diamondback, FANG. They're just one of the energy stocks that's actually weighing on the S&Ps today. I know you're following energies and are probably dialed in on the situation that's going on in Afghanistan, but it all seems to have had kind of limited impact on markets, energy markets specifically.
Yeah, the energies, and good morning, Ben. Great to be here. Thanks for having me on the program, as always. The energy markets are actually following pretty closely what we had talked about several months ago, which was that they would top in June or July of this year, and we would have a multi-month decline off of that top. And I think under many conditions, people would believe that this very same news, the same conditions that we're having in Afghanistan would have crude oil through the roof. But there are other technical and world events, including COVID and so on, that play their part. So at this point, the indices are in a very strong position. I would tell you that as long as, if I can just comment on S&P, as long as the S&P is closing daily above 4,437 or $4,427, which we haven't even touched that price today. But as long as we're closing above that, then just as early as the next 2 days, we would expect the S&P to be trading up at 44.78 to 80 and as high as 44.88. So yeah, I would agree with you that the markets are in a very strong position, somewhat counter to what the world news might have you expect.
You know, David, everybody's watching crude oil in relation to this. And again, a little bit surprised, many are, in terms of why we're lower today. But I think you bring up a good point that there's a lot of factors at play. And it does seem like some of the COVID concerns, at least in terms of crude, have been trumping some of the other bullish situations that have been, or you would think would provide support. Now, one of the reasons why we watch crude so very closely is, well, ultimately this relationship here, if we could just pull, you can see how crude tracks very closely. Now, we make it very clear that crude is not a proxy necessarily to the ES. They track each other very closely. And, well, in the same way that oil stocks are not a proxy necessarily to crude, but I'm noticing a few of them today, Oxy, Hess, MRO, Phillips. I mean, all at the top of the list in terms of losers in the S&Ps today. So certainly something to watch here in terms of the impact, the ripple effect. Crude oil can be tied to many of the price movements that we see, and we'll watch some of those levels. As you mentioned, in the S&Ps, that grind higher continues to play out. But let's talk about a couple individual names. I'm curious if you had some levels in terms of Walmart. They're higher to begin the week ahead of earnings. Any areas that stand out that we should be watching into the quarterly release?
Yeah, well, thank you, Ben. We like Walmart. We think that weekly closes, if they can do it, above $152 in Walmart, for us, that would be the earliest indication for higher prices and a potential advance to 158 to 160 into the first quarter of next year. Now, that would be kind of the latest that they would get there. They could get to the 158 to 160 much sooner if we were to have a weekly close above 152. However, I would like to say as well that if we get weekly closes below $152 in Walmart, that's a weaker position. Even though they're in great position overall, it probably indicates a corrective phase in Walmart for a decline to like 144 to 142, probably into December, plus or minus a month of this year. So we're heavily leaning on that 152 level as proof of purchase, so to speak. And if they can't get through it, then we are expecting a corrective phase into December of this year, probably down to 144 to 42. Really nothing to be too concerned about with Walmart. It's in a great position overall.
Here's what's expected: $1.56 EPS, revenue $136.0 billion. Now, I do want to point out that, well, again, Walmart 153 it was 153.66 to end the month of November, if I remember correctly. That was the high that we recently saw, and if higher this week, we'll be talking about 9 weeks in a row. So, David, we'll keep an eye on the 152 level. Let's talk a little bit about Home Depot, also expected to report. It looks like EPS expected to come in at $4.41 a share. Revenue expected to come in at $40.68 billion. Talk to us about, well, there's the numbers in terms of what's expected this quarter versus last quarter and last year. I'm looking at Home Depot right now, also up on the day, 1% ahead of earnings. Talk to us about what you're seeing in terms of key levels, some areas above and below to watch there.
Yeah, Ben, we're looking and are kind of focused on $346 in Home Depot.
Okay.
If Home Depot can't close above 346, and I know they're in a great position overall, but if they can't close above 346 by September, and maybe at the very latest by October, let's just say that that happened, they wouldn't be able to close above it, then a decline to $320 would likely occur in our work, again, by December of this year, probably plus or minus a month. Now, if Home Depot does close above $346 for people that are already long, we certainly view that as a stronger position, and we would expect higher prices subject to the conditions at that time. And hopefully I'd be on the program then to give you a larger forecast for the upside. And that upside would be indicated just simply by closing any week in the future here above $346.
David, I'm sorry, I missed you. You said 346. If we can't close above that on the weekly basis, down to 320. Was that the level?
That is correct.
Okay. That gives us
into. I'm sorry, Ben, go ahead.
You go ahead. Into the end of the
year, just basically into December of this year, plus or minus a month, if we can't close above 346 on the weekly chart. I do want to stress, I don't want to have anybody be frightened by those forecasts to the downside. Both of these stocks, Home Depot, Walmart, they're in great position right now. But stocks often are in great position right up at the very end. In fact, in many cases, some of the strongest moves occur at the ends. So I'm only pointing this out to make sure that people realize that there can be a relatively meaningful correction into late this year in both of these stocks that we're talking about.
Yeah, I don't see that as that big of a deal. Even if we did pull back to 320, it'd be back to the range that we kind of chopped up, if you remember, in the beginning of July, the first 2 weeks. Certainly still well above those June lows that we saw with the test of that 300 level. Home Depot, pretty good reflection of what we've been seeing in terms of the market, and kind of ties back to that discussion that we are having before we brought you in terms of the housing market and some of the strength we've seen there, as well as recent slowing some and possibly a reflection here. But we'll keep an eye on the 345.69 high that we traded into. That was the middle of May, and basically we've been 300 to 345 since looks like end of March. David, appreciate you joining us here and helping us take a look at a few names that are reporting earnings this week and breaking down what's playing out most recently in the Middle East. And we'll continue to watch crude oil in reaction to, or lack thereof, I should say, to that, as it keeps seems focus on some of the other fundamentals at play. David Williams, paid trader,